All right, great. I hope everybody can see my screen right now.
Yeah, we can. All
All
right,
right,
perfect.
good. So,
Also, I'm sorry to interrupt. Like, I believe most of us already have this trade view on their mobile device. I think someone walk us through on setting it up. I think that was
I
I
think
believe
he's not on the
we
call presently.
yes. I'm trying to look at the amount stack. Yeah, stack. I think they drop an update on that. So if there's a need to check on that, just go to the trading forex section and scroll through some messages around November 29. Yeah, in our Telegram private group, trading forex crypto section. So yeah, it's there.
All right, so now we are going to be talking about breaker blocks. Now, what does breaker blocks mean to you? Breakers, we refer to them as breakers. Now, in traditional trading, or let's say retail concepts. Now, when we talk about traditional trading or retail concepts, it's the way we started trading. Like, initially in trading, we have some old concepts that are still in existence now, like support and resistance, chart patterns, all those concepts are traditional concepts or retail concepts of trading. Now, this particular retail concept, there is what we call support and resistance. Now, in support and resistance, you would understand that we have what we call support turned resistance or resistance turned support. Let me quickly write it out. Support turned resistance, resistance turned support. Yeah, there's what we actually call support turned resistance or resistance turned support. Now, when we are talking about both of these, some people refer to it as what? Flips or zone flip. You can say, okay, flip zones. When we talk about flip zones, it's just talking about a support that turn resistance or a resistance that turn support. And how does it happen? Let's take, for example, we actually have something of this nature, right? And this place, let's tag it as our what? Support. Let's say price comes to this point, tapped on this, push to the upside. This is a support, right? Push to the upside, then came down again, pushed to the upside again. Now, when we have something like this, you know that this particular point, this green box, is actually referred as what? The support, because it's actually holding price from dropping lower, right? Now, when we now have price comes to that point, push down, tap on this point, reacted from it, then breaks through this point, something of this nature. Then at the long run, after price breaks through this point, then come back into it like this, then tap into this point, come back into that same zone, tap into it, and start selling down. What do we call this? This is what we call support turns resistance, because you can actually see that after we have price bounce on it, it's actually a support. But now when price breaks through it, tapped on it, then came back and tap on it and use it to what? To continue selling down. What do we see? That is support turned resistance, and we can refer to it as what? As flip zone. Now, same thing applies for the resistance turned support. Is something like this. We have something like this. You can see initially this point was a resistance. Price tapped on it, sold down, tapped on it again, then break through it, then came back, retested, and pushed to the upside. So now we can say what? Resistance has turned support. That is for the traditional way of trading. Now, when we now proceed, we proceed to the aspect of what? Other blocks. When we talked about, if you have gone through the initials where we're talking about support and resistance, demand and supply, you see that after we talked about demand and supply, we talked about other blocks and all of that. Now, we'll still be referring to each and every one of them. Now, let's take, for example, when we have something of this nature, right? We have price in an uptrend. Normally, what do you expect at this point? You're expecting that there will be a demand zone at this point or an order block at this point, right? You see an order block at this point. But what literally happens when price comes to that point? Now, when price comes to that point and breaks through that particular order block like this, then comes to test it and drop down. We say what? Price sold down with a breaker block. We refer to it as what? A breaker block. So initially, even before price comes back into that point, and we just have something like this, price breaks through that order block, automatically, that is what? A breaker block. Then price will just do something like this, come back into it, retest it, and what? And drop to the downside. So this is what we call what? Breaker block. So initially, you can see an order block that failed to push price to the upside. That is a bullish order block that failed to push price to the upside, and price breaks through it. We can refer to it as what? Breaker block. But it's not all you refer to as what? As breaker block, because some are not actually what? Valid. Breaker block. So we can refer to this as what? As breaker block. This is a breaker block. Same thing applies for an uptrend. An uptrend, we can have something of this nature, whereby price is in an uptrend like this. Then we have, definitely, you know that we have something of this nature. There will be a supply at that point. Then price would come take this out. When price takes this particular point out, you're expecting that price will come below here. No, price might not come to that point. Price will just tap on this and push to the upside. So this is what? A breaker block. Now we have little rules or some things to consider before actually using a breaker block. Now, a breaker block is used for what? Breaker blocks are used for continuations. Breaker blocks are used for continuation trades. Breaker blocks and also a breaker blocks must what? Break structure impulsively. Before you say you have a breaker block, it must break structure. It must break structure aggressively. Yeah, a breaker block are used for continuation trades and it must break structure aggressively. Now take example. Look at this one I drew here. What did you see? It broke structure to the upside aggressively, right? Now, when we have something like this, the one that does not break structure aggressively, we cannot call it a breaker block. Let's say we have something like this, then price does something of this nature. Like this, then move sluggishly and break structure like this. Now, would you call this a breaker block, this point? No, you can't call that a breaker block. This point, you can't call it a breaker block, and that is how it is. So quickly, I'll be diving to my chart and I'll be showing you some example of what? Of breaker blocks. It's everywhere. It's everywhere. Now, take a look at this. At this point, we are in an uptrend, right? We are in an uptrend at this point. I'm coming, let me show you. We are in an uptrend at this point. Now, initially, you expect that price will come into this block or this, any of these. Price will come into any of these. This is a complete order block here. So let's say we have an order block here. What do you expect? You're expecting that when price comes into that point, we will get a reaction from there. Now I'm coming, let me just take everything here. Now, what are you expecting? You're actually expecting that when price comes into this particular point, since we are in an uptrend, we have that price will tap on this green box and continue pushing to the upside. But now, what did you notice at this point? You can see how price broke through that particular demand zone aggressively. Now, when price broke through it aggressively, what can you see? I said a breaker block must break structure aggressively. But now, what did you see here? It actually broke the structure aggressively, right? It broke it aggressively. Now, look at it. At this point, there are a lot of traders that would actually be looking that price would come back into this point, into this demand before it continues selling. But now, what did you see? Price literally came back into the breaker block and what? Into this point and continue selling. And that is it. It's gone. Now, look at it. This was the same thing I drew for every one of you. Instead of price to come and react from here, price broke through it aggressively. Something of this nature. Yeah. Price broke through it aggressively. Then we have a little push to the upside. And price dropped at the long run. It came back and what? And continued dropping. And that is what? A breaker block for you. Now look at another example of a breaker block. Now this one, price did not even come to tap into it fully. You can see it's very close. Those are breaker blocks. There are more examples. Look at this. Price broke through this aggressively, right? Went down. But see, this one was used to what? To push to the upside. These are breaker blocks. They are everywhere in the market. They are everywhere. But now, don't forget the rule. It must what? Break structure aggressively. Now, look at this one now. A perfect example. Look at this. We have the break of structure here, right? After we have the break of structure, some people will be expecting that price will come to this extreme, right? Price did not come to that point. Now, take a look at the breaker. This is the breaker block. And what happened? Price used that point to push to the upside. Can you see? That's a breaker block. Now, let me check for other examples. Maybe that will be the last example. Now, look at this. This is an uptrend, right? We're expecting that when price comes into this point to keep pushing back up, but price breaks this aggressively, right? Then we have something of this nature. See how price came into that breaker block. That's just how it works. So this is just everything on breaker blocks. I hope you enjoyed today's session. So can I have questions, please? Do we have anybody with questions on breaker block? So we'll just wrap it up for today.
Yeah. Good evening.